Now, you might have heard of the DCA strategy, you might have heard of DCA, you might have been wondering what it is, or you might have heard a bit about it and you're wondering how can I go about this, what is it all about, and I'm going to explain it for you today. There's going to be tips, advantages, disadvantages, and also examples. So let's get straight into this guide. It is an investment strategy where the investor buys a fixed dollar amount of cryptocurrency at regular intervals over time. This means that you are using a particular amount of money, maybe let's say $20, and you invest in it maybe every week, every day, every month, every year, however you want to do it, maybe every 2 months. It can differ based on each person's strategy and whatever they are trying to buy. DCA or dollar cost averaging is ideal for building positions in the market and is suited for an investor mindset of accumulating a cryptocurrency over time. Which means if you are planning to use DCA, you are most likely planning to build more and more of maybe the cryptocurrency or the assets that you're investing into. DCA is one of the most popular strategies in crypto investing. There are many ways to go about it and many ways not to. And these are going to be the tips that will help you. In a survey held by Kraken, October 7, 2024, it was discovered that 59% of crypto investors use DCA as primary investment strategy. While this doesn't account for every crypto user, it does show that it is a popular and effective crypto strategy if used right. Now, here are some of the tips that you should take note of. Number one, DCA can be used as a hedge against market volatility. This implies that it is a strategy that reduces potential losses from unexpected price swings in the market. 2. DCA is a good strategy to use during turbulent periods in the market. 3. DCA is an ideal strategy for investors who do not always want to monitor the market. 4. DCA is better for those who plan to hold their investment in the long term and is not essential for a quick profit strategy. 5. It requires patience because you won't see changes immediately but over a long period of time. A bit of a pause here before we continue. If you want more videos like this, talking about strategies and more about crypto investments, well, ensure to tell me more about it in the comment section below and also like the video. Back to the video. 7. DCA strategy is only effective for the right assets. Not all cryptocurrency are good to invest in using this method. DCA is also not recommended to use in a constantly declining market without extensive research. 8. There is also a con of higher transaction fees, especially for tokens that require higher fees. A good platform could alleviate this problem. 9. The DCA strategy is best used for coins or tokens with market cap of above 10 billion. They provide lower risk, coins like BTC, ETH, XRP, but it's up to your discernment. 10. Less market cap coins have higher risk of a complete dump or price downward movement with no recovery. Hence the higher risk of using the DCA investment strategy for these coins or tokens. Now it's time for an example, and I'm going to be showing you how a DCA strategy would look if you were to use it with Bitcoin. And we're going based on every month on a particular day of the month. And we're also going to be using a time, which is 2 p.m. as you can see over there. So 15 January to 15 July. And these are the prices, and this is also the average of the price. Now, if you want to check out, the profit that you would make, let's say if you want to sell it, you just have to go by the price of Bitcoin on the 15th of July minus the average, and it would give you the results you have over there. So, of course, it's meant to be done over a long term, so you don't really need to try to cash out or anything, but that is how it works, and it will differ based on the cryptocurrency that you are using the DCA strategy for. In your mind, you might have a question. Now I know about the DCA and how it works and some tips about it. Now, where can I buy these tokens from? Where can I use the DCA from? Which platforms or exchanges are useful for it or can be used for the DCA investment strategy? Well, feel free to do your research on these. There are automated and manual ways to DCA, and there are exchanges to do it. Make sure to research well before choosing. Some platforms are restricted to some countries. So some of the popular ones that many people recommend are 1. Kraken, 2. Binance, 3. Strike, 4. SWAT Bitcoin, 5. Coinbase, 6. Crypto.com, 7. River, 8. Newton. As for the first one, Kraken, it has a whole site where they explain about it. So if you want to try it out, you can ensure to check the website just as you're seeing it on the screen right now. That's how it looks, and they also explain about it. Now, many people might like it, some people might prefer another of the options. So feel free to check them out and make your decision. In conclusion, the DCA strategy isn't for everyone, but you can try it out and see for yourself if it works for you. That's a wrap for this video. If you enjoyed this video, click the like button, subscribe to the channel, and hit the bell icon to get notified. If you want to join our Telegram or WhatsApp, the link is in the description box below. Thanks for watching. Goodbye.